Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Apple report for Friday, November 3rd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's take a look at the big picture, work our way into the day itself. Just a reminder that last week we came off once again long-term support, this band of channel support. I'm saying in the mid 160s, 165.57 to 166.99. Having come off of that area, we maintain a 1 to 2 month target at 187.38 that is now in play, and I'll get to that in a second. And also, by this point next year or sooner, still anticipating 230.13. The settlement above these channel tops back in May did indicate a long-term show of strength. This dynamic between the mid 160s and the upper 180s, just kind of a midterm framework that can play out through the rest of the year. We can top out at 187.38 and fall back into the mid 160s again within a month or so of doing so. But ultimately, long term, holding above the mid 160s, I'm holding to 230.13 as a, I don't know, like by this point next year or sooner. The sooner would, of course, come with settlement above this descending channel top at 187.38. Then we could be within 3 to 5 months perhaps. So that is the big picture. And if over the next week, 2 or 3, we were to close below 165.57, that would need to be by a 1% margin. This week, 163.91. And if that occurred, then and only then would I expect the low 130s over the following 3 to 5 months. But until then, you can bottom pick this mid 160s all you like, whether you're, a day trader, 3 to 5 day swing trader, a 1 to 2 month swing trader, if you will, up to 187.38, or a longer-term investor expecting 230 and higher as we move into next year. So that is that. And as you're well aware, if you've been following this series over the last few days, you know that we leapfrogged above this speed line on Thursday, opened above it, closed above it, 174.65, able to contain selling through next week, and now rather than a 1 to 2 month target in the mid to upper 180s, 186.45 on the daily chart, it's more like, I think, 2 to 3 weeks is realistic. By the end of November anyway, we should test this 186.45 formation, and that is the 2 to 3 week framework. So if you're given the opportunity to buy 174.65 and your time frame is a 2 to 3 week swing trader, you might reach for, say, 185 out of the money calls that don't expire for at least, I'd go a couple of months out on that. And that is the play right now. So for the day itself, I do have 178.11. That is a 3/8 upside Fibonacci from the July high against the more recent low from about a week and a half ago. We can top out here on an intraday basis. You can see intraday only. If we push or perhaps open above 178.11 today, 180.78 is in reach. And that is, really was the gap above 174.65. The settlement was the sort of the final conclusion here, but having closed above 174.65, 180.78, I say a 3 to 5 day target. Let's be real, we might reach it actually today, and 186.45, I think a realistic 2 to 3 week objective. So if we push or open today above 178.11, 180.78 in reach, where we can top out for the day. And I might add, now this is the strong market. We just came off of long-term support, so this rally, this rebound rally, really doesn't surprise me. Closing above 174.65, we should reach 186.45 within 2 to 3 weeks. I want to say, for those of you who are aggressive 3 to 5 day swing traders, you may have at 180.78 because we could top out here and fall back to 174.65 within 2 to 3 to 5 days. We could trade inside of this area here through next week, perhaps. And if we close above 180.78 with this kind of volatility, if we close today above 180.78, I think by the end of next week, we reach 186.45, which on the weekly chart, once again, comes in at 187.38 and can contain buying through November, even perhaps the rest of the year. We could fall back, as I say, within a month or two, back into the mid 160s. But if we were to close above 187.38, say by the end of next week, I see aggressive gains through Q1, the next 3 to 5 months, then in reach of 230.13. So that is that. Let's go back to this image here, 174.65. We have minor points on the way down, but I'll just sort of simplify it and say that if we do close today below 174.65, this market is likely to fall back to that long-term support area, possibly by the end of next week. That could be a 3 to 5 day play, or it could take the better part of 2 weeks. Tough to call. On the way down, we've got 171.37. Oops. Let's see here. Where did it go? I don't know how I did that just now. I clicked the wrong button. But on the way down, 171.37, I think becomes a realistic 2 to 3 day target. That is the high of the low. I could have a horizontal line right here to show you that if we close below 174.65 today, Monday, 171.37, and possibly by the end of next week, back into this mid 160s long-term support, where once again we can bottom out. For the day, for the week, for the month, and through all of next year, anticipating this 230.13 area by this point next year. I repeat myself so much, but I've learned from many years of providing analysis to professional traders and institutions in the commodity world and in the stock world that repetition is important. It's boring, but it's important because you have to drive home the point. If you say it once, it's just not enough, right? So I'm going to leave it at that for Friday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Apple. You have a great weekend.